In an increasingly interconnected global economy, international finance plays a pivotal role in shaping the economic landscape of nations. From facilitating trade and investment to managing currency fluctuations and mitigating financial risks, the dynamics of international finance are intricate and multifaceted. In this article, we delve into the complexities of international finance, exploring key concepts, mechanisms, and challenges that define this vital aspect of the global economy. Understanding international finance. At its core, international finance encompasses the flow of money across borders, encompassing a broad spectrum of activities such as foreign exchange markets, international trade, cross-border investment, and global capital flows. Unlike domestic finance, which primarily deals with transactions within a single country, international finance involves transactions between multiple countries, each governed by its own set of regulations, currencies, and economic policies. Foreign exchange markets. Central to international finance are foreign exchange, forex, markets, where currencies are bought and sold. These markets facilitate trade and investment by providing a mechanism for converting one currency into another. Exchange rates, determined by the supply and demand dynamics of currencies, play a crucial role in shaping international trade competitiveness and capital flows. Governments and central banks often intervene in forex markets to stabilize exchange rates or achieve policy objectives, such as promoting export competitiveness or controlling inflation. International trade. International trade involves the exchange of goods and services across national borders, driven by comparative advantages, economies of scale, and market demand. Trade finance mechanisms, such as letters of credit and trade insurance, help mitigate risks associated with cross-border transactions, providing assurance to exporters and importers. Trade imbalances, resulting from differences in import and export levels between countries, can impact exchange rates and global economic stability, underscoring the interconnectedness of international trade and finance. Cross-border investment. Cross-border investment encompasses a wide range of activities, including foreign direct investment, FDI, portfolio investment, and mergers and acquisitions, MANDA. FDI involves the establishment of business operations or the acquisition of assets in a foreign country, driven by factors such as market access, resource availability, and strategic expansion. Portfolio investment, on the other hand, involves the purchase of financial assets, such as stocks and bonds, issued by foreign entities. MANDA activities often involve multinational corporations seeking to expand their global footprint through acquisitions or strategic partnerships. Global capital flows. Capital flows across borders drive financial globalization, enabling the efficient allocation of resources, risk diversification, and economic development. Capital flows can take various forms, including foreign direct investment, portfolio investment, official development assistance, ODA, remittances, and foreign aid. However, volatile capital flows can also pose challenges, contributing to currency volatility, asset bubbles, and financial instability. Foreign exchange and political risk. These dimensions of international finance largely stem from sovereign nations having the right and power to issue currencies, formulate their own economic policies, impose taxes, and regulate movement of people, goods, and capital across their borders. Fiat currency. The idea of fiat currency was established just over 1,000 years ago in China during the Yuan, Tang, Song, and Ming dynasties. Fiat money can serve as a good currency if it can handle the role that a nation's economy needs of its monetary unit, storing value, providing a numerical account, and facilitating exchange. International financial management. Sometimes referred to as multinational finance, international finance is additionally concerned with matters of international financial management. Investors in multinational corporations must assess and manage international risks such as political risk and foreign exchange risk, including transaction exposure, economic exposure, and translation exposure. The fundamentals of international finance. International finance revolves around the flow of capital across borders, encompassing various financial instruments and markets. One of the fundamental aspects of international finance is foreign exchange, which involves the conversion of one currency into another. This process is crucial for international trade and investment, as it determines the relative value of different currencies. Key players in international finance. Several key players drive the dynamics of international finance. Central banks, such as the Federal Reserve in the United States and the European Central Bank, play a crucial role in setting monetary policies and influencing exchange rates. Multinational corporations engage in international finance to manage their global operations and mitigate currency risks. Additionally, international financial institutions like the International Monetary Fund (IMF) and the World Bank provide financial assistance and promote economic stability on a global scale. International financial markets. International financial markets serve as the backbone of global finance, facilitating the trading of currencies, stocks, bonds, and other financial assets. The foreign exchange market, also known as the Forex market, is the largest and most liquid market in the world, with trillions of dollars traded daily. Other key international financial markets include the bond market, stock market, and commodity market, each playing a unique role in the global financial system. Exchange rate determination. Exchange rates play a critical role in international finance, influencing trade flows, investment decisions, and economic policies. Various factors, such as interest rates, inflation, political stability, and market speculation, contribute to the determination of exchange rates. International financial instruments. A wide range of financial instruments are utilized in international finance to manage risks and optimize returns. These instruments include foreign exchange derivatives, such as futures and options, which help businesses hedge against currency fluctuations. International bonds and syndicated loans are common financing tools used by governments and corporations to raise capital in global markets. Understanding the intricacies of these financial instruments is essential for navigating the complexities of international finance. Implications of international finance. The implications of international finance extend beyond economic boundaries, impacting geopolitical relations, global trade dynamics, and financial stability. Exchange rate fluctuations can affect the competitiveness of exports and imports, leading to trade imbalances and economic uncertainties. Financial crises in one country can have ripple effects across the globe, highlighting the interconnected nature of international finance. International finance serves as the cornerstone of global economic interactions, shaping the financial landscape of nations and businesses worldwide. By understanding the fundamentals of international finance, key players, financial markets, exchange rate determinants, financial instruments, and implications, stakeholders can navigate the complexities of the global financial system with confidence and insight. Stay informed, stay proactive, and stay ahead in the dynamic world of international finance. International finance is a dynamic and complex field that plays a critical role in shaping the global economy. From facilitating cross-border trade and investment to managing currency fluctuations and financial risks, the intricacies of international finance require a nuanced understanding of economic fundamentals, policy frameworks, and market dynamics. As the world becomes increasingly interconnected, the importance of international cooperation and coordination in addressing the challenges of global finance cannot be overstated. Thank you for joining us on this financial journey. We hope today's insights have added value to your financial literacy. Remember, financial success is a journey, not a destination. If you enjoyed today's content, don't forget to hit the like button, share with your friends, and subscribe for more insightful videos.